Greetings, Algo artisans. Bitcoin is going off.
Ludicrous speed!
In fact, today's show is called Bitcoin Exploding, Bitcoin all-time high broken before the halving, and we'll do a Bitcoin price prediction, and we're going to do it right now. So we're gonna start with the charts. We're gonna jump straight in, and this is kind of a continuation of the morning show today. So I had been talking this morning about what might happen. Of course, Bitcoin had already jammed up towards the 60,000 level. I think it had broken. It was like 61, 62 during the morning show. I'd have to look back at that. And if you look at the chart, I actually drew a couple of ideas of what I thought might happen. For now, Bitcoin has snapped down just a little bit, but it does not mean that it's done going up. Bitcoin went ahead and tested some highs, grabbed liquidity from the $64,000 range, and for me, going past 63,000 and staying past 63,000 is a key indication that we might see the all-time high prior to the halving. Of course, it could happen anyway. Even if Bitcoin were to retrace and make its way back up there after another week or two, it's still very possible we're going to see a new all-time high before the halving. And I'm going to attribute this to possible supply shock due to, of course, the institutional money getting into Bitcoin, and that is pushing a lot of people to FOMO in. And what we're seeing right now is definitely FOMO, price action. So whenever I see FOMO, I look for pullbacks. I look pullbacks on a Fibonacci. That's how I trade FOMO. Now, just to look at the possible price action, we might see Bitcoin pop up, try to make its way to that all-time high, which is 69,000, but it may reject before that. There's going to be a lot of moon boys, though, that if price does break above the all-time high, which is basically 69,000, a lot of people might just throw so much money into Bitcoin that a lot of liquidity goes to the upside. Now, that would be a perfect opportunity if the smart money wanted to go short. That'd be a great opportunity to knock price down, because that liquidity, all those people buying and buying, would allow very large positions of shorts to be open, right? You need people to go long in order for you to go short. What does this mean? Well, okay, so look, buyers need sellers. Effectively, going short is selling. It's not much more complex than that. You have only this many people buying, and then you have the smart money with that much money on top selling. They're not going to get all those positions filled. If they want to sell this much crypto, let's just make up a number and say, $100 billion. Let's say that this is probably way bigger than what's real here, but let's just make up a number. There are an aggregate, a total of $100 billion in desired shorts for the smart money. And we're just pretending we don't know this is happening. This is just an educational exercise. And again, anything that we say on these shows is not investment advice, right? This is all just for entertainment and education purposes only. Do your own research, talk to a licensed investment advisor before putting your money on the markets, because you can lose it. But in this case, in this example, we're going to pretend that the smart money wants to go short with a position size of $100 billion when you add them all up. Well, if there are only $100 million worth of longs, they won't be able to fill it. So let's just say that, retail is buying right here. Retail is like you and me. And so if the smaller traders, the guppies, the minnows, the whatever you call them, are only able to push price up based on $100 million in longs, and then you have this big, huge group of people who want to go short to the tune of $100 billion, they won't be able to get that short filled. They'll only be able to fill $100 million worth of shorts. And then you have, $99.9 billion left over of shorts that just never get filled. The institutional money really wants this bullish action to exist if they want people to FOMO in and buy to the tune of $100 billion, which is 1,000 times greater than this $100 million. Then you're looking at a scenario where you have to entice people into the market. And enticing people into the market, one way to do that is to break an all-time high, right? If price is now higher than it's ever been, it's going to be all over the news. A lot of attention on Bitcoin at that point. A lot of people are just going to be like, oh, it's going up forever, and they'll buy. And instead of 100 million, you might get your 100 billion, right? All of those large traders who need to go short at this $100 billion level, they will fill that 100 billion. And then let's say the not smart money is now exhausted. They have blown their entire wad. Now the position is short, and now the price can easily be pushed down. The bulls have exhausted their energy. Now, I'm not saying this is going to happen. In fact, quite the opposite could happen. Very easily, price could break the all-time high and rocket up. Very possible. However, this is also a very common scenario at an all-time high and at a given resistance. In fact, this scenario that I'm talking about here, going short, getting people to FOMO in, all of that could have just happened right now. I don't think it's happened, but it could have just happened as price eclipsed 63,000, and technically I think eclipsed 64,000 and went just above 64. on some exchanges for sure. So that could have happened, but I don't see that right now. The move back down after this was not drastic enough for me to think that happened. Usually those kind of blow off tops are very obvious. It certainly looked like it on the short, lower time frames, but really if you look at the size of this move up, 100% move up, and it went down about less than 38%. Now that's a big move, right? The 382 Fibonacci is a big move down. Don't get me wrong, that's huge. To go up, we'll call it 100%, and then to go down almost 40%, that's big, right? It's already gone back up a fair amount. So price, it does appear at the moment like it will continue at least to go sideways or up, and the two scenarios I've built here to me are the most realistic. If price is able to stay above this kind of 63-ish area to the middle of this range that I've mapped out based on old price action, if it can stay above the top half of that, then I think it will consolidate below the prior all-time high, and it could easily go up after that or down, again, based on this possible, market maker short, or it could just go up. So either way is possible, and it doesn't matter to me. I have spot bags that I've held. Even if I do a hedge trade and I lose that hedge trade, my spot bags tend to do well. If I do a hedge trade and the spot bags take a hit, the hedge absorbs some of that hit, and of course over time the spot bags do well. What I mean by spot bags is I mean Bitcoin that I bought years ago that I've never sold, which is like most of my holdings. My spot holdings, I don't think I've sold in ages, years. Why might the market makers go short? Why might there be downward pressure on price? That's a really good question. For now, I don't really have much more data as to which way price is going to go. The algos are just bullish. So I would say more than likely price is going to go up. But in the meantime, of course, there could be pullbacks. The algos could change. There's a lot that can happen. And when you have this crazy move up today, a move up of $6,000, a move up of over 10% in a single day, when you have that, a lot of your algos and indicators can get a little dicey, not as easy, not as accurate to read. So here's a reason why perhaps there might be a reason to push price down by very large players, and it's the miners, right? So there's a Forbes article here that talks about this article is titled "Bulking Up for Bitcoin's Halving. Miners Sold 1.6 billion in stock in 2023." And this article goes on to talk about how when the halving happens, the rewards will get cut in half. Now, the price of Bitcoin going up should make up for the difference in that, but that's a risk, and that's a big risk for miners to take on the short term. So it may be that to fund their operation, they may actually have to sell their holdings of Bitcoin and to put money in the bank. And in fact, there's a second article in Bloomberg that says the exact same thing. And it says here, struggling Bitcoin miners wary of token's big halving event. Bitcoin miners brace for 50% cut token rewards next year. Miners also battling rising electricity costs and debt payments. So yeah, miners went into debt to fund their operation. Electricity is getting more expensive, which means it costs more money to create a Bitcoin. And now the rewards are being cut in half. And historically, you can see here that the miners have been selling around this time. Right before, right after, in order to keep their operations going. Okay, so, the hash rate is going to cost twice as much to maintain. 100% of Bitcoin comes from the mining. And so miners will have Bitcoin and then they will wait for the price to get high before they make their larger sales. They'll sell enough to fund their operation, and they'll probably sell just enough to fund their operation if they think the price is going up. But if they come to a point where they think the price is going to fall, then they're going to want to sell as much as they can. And that kind of sales, even on the OTC market, will have an effect that will push price down on Bitcoin, very, very likely. And there tends to be a pullback right before the halving and even right after the halving. So that might be a reason why we do see that change in the Bitcoin price. I hope this was helpful. Please come over to algofactory.tech if you want to learn more about what we do. We help people develop trading methods, otherwise known as algorithms, that help them extract money from the market on a regular basis. And the probability of your success is dependent on your effort. We've done it. We can show you how we did it, and you'll develop your own plan. Come on over, trade your job, upgrade your life. See you on the next one.